Good evening, everyone. Thank you very much for joining us for tonight's Planting Seeds and Growing Leaders. If you have any questions during the presentation tonight, please use the Q&A button on the bottom of your screen to submit your questions in advance. And now please welcome the Executive Director of the Minnesota FFA, Val Aarsvold.
Well, thank you, everybody. We're so happy you're here with us tonight. I don't know if you know this or not. I sure hope you do. It's the Minnesota State FFA Convention this week, and we couldn't let those students have all the fun. We needed to come together and celebrate all that is right with agricultural education in the FFA, and we couldn't think of a better way than to talk about some past successes in investing these young people, while at the same time looking forward to how we can provide opportunities for years and years to come. It's an important topic. There are over 35,000 students enrolled in agricultural education classes across the state, and so many, including myself, understand the value and the impact that those class opportunities, as well as their involvement in the FFA, will have on the lives of those individuals, just as they have for me and countless others. So we're excited that you're here. We look forward to the opportunity to tell you about some of the success stories of the past, but even more importantly, look to the future to see how you and others can be involved in laying down a successful, fruitful future ahead. We've named this program tonight, Planting Seeds, Growing Leaders. We know that it only takes a simple act or a big act, but an act of any kind to make a positive difference in the lives of young people and grow them into leaders for their local communities and for agriculture. We have put together a wonderful program for you tonight. We are excited and appreciative of everybody who's joined us and those presenters who are going to share their story as well as their expertise. So as we get ready, I know you've seen the agenda, but I just want to share a special thanks. We'll be enjoying some music from a young member of the Waseca FFA chapter. We'll hear from our board chair, Ms. Jean Johnson from Ag Country Farm Credit Services. We'll hear from attorney at law at Gislason Hunter, Reed Glawe. We will also share our stories as Minnesota FFA Foundation staff, Amanda Sommers and myself. But if you're like me, you probably will find the message from our student, Martha Menning, to be one of the most heartfelt messages of the evening. And she's not alone in the positive impact that agricultural education and the FFA has on the lives of young people. So we'll have a chance throughout the night to hear some stories about the impact of FFA. We'll hear some wonderful strategies that we would encourage you to consider as you look at how you can make a difference in young people. And then following those presentations, we'll open it up for questions and answers. And we certainly look forward to answering your question and looking forward. So with that, I'm very pleased to share the talent of Mr. Jourdain Koba Prieb of the Waseca FFA as he shares with us a song that I think depicts the beauty of young people and our involvement with the FFA.
Hi, my name is Jourdain Koba, and I am a senior in the Waseca FFA. I'll be singing I'm Gonna Be Somebody Someday by Travis Tritt. Bobby plays guitar on the other side of town, where it's hard for a poor boy to find I knew he was born to play. People said get a real job and support your family, 'cause there's no future in the road you're taking. finished to the top. Now he's number one on the stage and the radio. Still he can't believe how people come from miles around. When it seemed like only yesterday he'd said, I'm gonna be somebody. One of these days I'm gonna break these chains. I'm gonna be somebody someday. You can bet your hard-earned dollar I will. Bobby played his hometown one full moon August night, when he heard a voice in the front row saying, it was a sandy-haired river boy with the same old hungry eyes. Looked up at Bobby and said, I'm gonna be somebody someday. One of these days I'm gonna break these chains. I'm gonna be somebody someday. You can bet your hard-earned dollar I will. You can bet your hard-earned dollar I will. Thank you.
Hi, and welcome to the Planned Giving Seminar sponsored by the Minnesota FFA Foundation. My name is Jean Johnson, and I currently serve as the board chair, and I'd like to take this opportunity to give you a little background on who we are before the program begins. Ever since 1953, Minnesota FFA Foundation has played a vital role in supporting the development of young people enrolled in agriculture education and the FFA. From the very beginning, the foundation has supported members through strong chapters and supported teachers. The Minnesota FFA Foundation provides support through scholarships, youth leadership, teacher preparation, state FFA convention, and lots of other special projects. These efforts are all supported by people like yourself and businesses that believe in the value of youth and agriculture. So on to tonight's program. It's a very important one, and one that we often don't really think about as it seems so far down the road. However, what is so important about planned giving is that it gives you a chance to make that road one that never ends, or at least goes further than you could ever imagine. And an extra plus, you get to be the driver. So tonight, we will hear from experts on how to make a plan for managing and giving assets during your lifetime and far beyond. So let's sit back and think about where we might like to give and listen to the power of planned giving.
Planting seeds, growing leaders. Thank you for taking time to be with us today. I'm Val Aarsvold, Executive Director of the Minnesota FFA Foundation. I want to take a few minutes to share with you the impact that support has on today's FFA members and the impact it will have for generations to come. I share this message with you because I personally know the value that agricultural education classes and the FFA have had on my life and members of my family, and thousands of kids across the state of Minnesota. Since 1953, the Minnesota FFA Foundation, a 501c3, has assisted individuals and businesses in supporting the development of leaders for agriculture and local communities through strong agricultural education programs. It is the mission of the Minnesota FFA Foundation to secure strategic partnerships and financial resources that promote and enhance premier leadership, personal growth, and career success for Minnesota youth in agricultural education. Donations to the Minnesota FFA Foundation supports 5 major areas. They include scholarships, youth leadership, teacher preparation, state FFA convention, and other special projects. What do we mean when we say planting seeds? We look back at the generosity of those who planted the seeds of opportunity and growth for students. To Robert and Alta Van Trees and Dr. Edgar Persons, It was providing gifts to strengthen the Minnesota FFA Foundation's overall program support. To the Nick Lumen family, it was directing memorials to support the Blue Jackets Bright Futures program so future FFA members could experience all that FFA has to offer in their very own jacket. To Dr. Curtis Youngs, he took the opportunity to commemorate his parents' legacy as he permanently endowed the sheep proficiency in their names. It will forever be known as the James E. and Nancy L. Youngs Proficiency Fund. To James Tracy, it meant gifting his farm and other assets to the Minnesota FFA Foundation to provide scholarships that support young people as they prepare for careers in agriculture. In just a few years, without the gift being fully realized, his generosity has already supported nearly 100 students enrolled in 2- and 4-year college programs. What do we mean when we say growing leaders? We consider those who are supported through donors' generosity. Each year, over 35,000 students enrolled in agricultural education classrooms across the state. Of these students, over 40% are from families that are economically challenged. With your help, we can provide opportunities for students to develop the skills they need for their future careers. We can provide opportunities to grow for leaders in agriculture and local communities. Their success is our success. Students who take 3 or more career and technical education classes, which includes agricultural education, graduate at a rate about 10% higher than the state average. That's good for the student, their community, and for our state. As you consider your impact, your legacy, I hope you'll consider a gift to the Minnesota FFA Foundation. With your donations, we can plant seeds and grow leaders for years and years to come. To learn more, please visit our website or contact us for additional information. We thank you for your support.
Good evening. Hello. My name is Reed Glawe. I'm a partner with the Gislason Hunter Law Office in New Ulm, Minnesota. Thank you for joining us. I want to extend my appreciation to the Minnesota FFA Foundation for inviting me to present to you this evening. I hope you and your family are well and safe and are able to make it through some of these trying times that we are living through. Some of the things I want to talk with you tonight about are estate tax, gifting, and planning strategies. There's basically 3 topics I want to talk with you about. You know, when I meet with a client for the first time, I tell them there's basically 4 things you want to have as part of your estate plan, and this applies to all my clients, regardless of whether they have a taxable estate or not, or whatever the size of their estate might be. And those 4 things are a will or a revocable trust. I'll talk about those more in a second. The second thing is a power of attorney. The third thing is a healthcare directive to deal with medical issues for your person, yourself. And the fourth thing is not something that I do, but it's a funeral plan. If you've ever had to plan a funeral for somebody, it can be difficult if you don't know what they wanted or what their preferences were. So really, when you do a funeral plan, you're not only doing it for yourself, but you're doing it for your loved ones, for those who are surviving you and those who are maybe closest to you and would be trying to figure out what it is that you want to have happen with your person and what type of ceremonies or things you want. So that's all I'm going to say about funeral plans. So the 3 topics that I want to talk about are those 3 basic requirements that you want to have for an estate plan. I then want to talk about tax considerations, both the federal estate and gift tax landscape, what the Minnesota state tax rules are, and then how charitable gifting can be used in the case of income taxes. And then lastly, we'll talk about some gifting strategies, what you can do, what's available to you from the most basic gifting to the more sophisticated or complicated gifting strategies and how those can be used. If you want to do some gifting, if you want to support a charity of your choice, or you want to leave a legacy for those that come after you. So let's get started. So in terms of the basic building blocks of an estate plan, again, kind of a estate planning 101, you're going to need a will. You're going to need a last will and testament, or you're going to need some type of trust. A last will and testament lays out who you want to have get your assets. They may include estate tax planning features. They may have built within your will certain trusts that are used for tax avoidance purposes. A will goes into effect when you die. If you want to avoid probate, then typically the way you would do that is you would have a revocable trust that you would set up now. You would transfer assets into that trust, or you would continue to own assets in your own name, but you would set them up in a way so that when you die, title to those assets automatically transfer into the trust. For example, if you had bank accounts, you could set up payable on death, and you would name your trust as the payable on death or POD, so that when you die, title of the bank account would automatically go to your trust. So you can either fund the trust now, or you could fund it at death. And then when you die, your trust becomes your will. And it may include subtrusts within it to deal with tax issues. But basically, your trust handles or directs where your assets are going to go. And it's kind of the same as your will in that respect. But the nice thing about a revocable trust, and what farmers typically like about revocable trust, is that, number one, it avoids probate. And two, if you avoid probate, what your estate plan is kept private. With a probate, that's all public information. It's documents that are filed with the court. It's public record. And typically, people like to kind of keep that private to themselves. So I've talked about revocable trusts. There's other trusts that you might set up that are irrevocable. You might put a life insurance policy into an irrevocable trust to get the value of that death benefit out of your taxable estate, and yet use the death benefit for the benefit of your spouse or your children or somebody else. Testamentary trusts are trusts that you set up when you die. Those would be the trusts that I referred to that you might have in your will, where you have a will and you give some of your property into a trust. The other two building blocks to a basic estate plan would be a power of attorney. Obviously, a will doesn't go into effect until you die. If something happens to you while you're alive and you become incapacitated, you're still alive. So your will isn't going to help you. But you might be in a situation where you're not able to deal with your own affairs, your own financial matters, and other things. So that's what a power of attorney does. It's an instrument where you designate somebody to act on your behalf while you're alive and to deal with your personal affairs. So that's what a power of attorney is for. The other thing you need is a healthcare directive. Healthcare directive is a document where you appoint somebody to make healthcare decisions for you if you are unable to communicate at the time what you want to have done, whether that is a certain medical procedure, whether it's where you're going to be cared for, what type of facility, hospital, whatever that might be. You're appointing somebody to make decisions for you. And I always tell my clients, when you do a healthcare directive, obviously you want to get that healthcare directive to your doctor's office or to the local hospital so they have it on file. But you also want to talk to the person that you designate as your agent and have a discussion with them about what you want to have done in certain situations. What if you're in a coma? What if you're dying? What if you're going to die? You have an illness that there's no question that you're going to die. Well, how do you want to have those end of life experience? What do you want to have done to you? Do you want to be kept comfortable? Those are the type of things that you can deal with in a healthcare directive. Also, a healthcare directive can deal with whether you want to be an organ donor or whether you want to be buried or cremated. You can also have in there instructions on, if you have a family burial plot someplace in a particular cemetery, you can include that information there. Again, you want to get that to your hospital or to your doctor, and you also want to give a copy of it to your agent who you've designated. So let's now talk about some of the tax considerations. For Minnesota residents, there are basically two tax structures that you have to deal with when it comes to estate tax or gift tax. There's a federal estate tax, there's a Minnesota estate tax. There's a federal gift tax, but there is not a Minnesota gift tax. And we'll talk a little bit more about some of the advantages that presents to a person doing some estate planning. But let's talk about the federal estate tax for just a minute. So the federal estate tax is a tax on your gross taxable estate. And in very general terms, your gross taxable estate is everything that you owned at the time of your death. Regardless of whether you had a will or a revocable trust, that won't make any difference. Even life insurance that you have on your life, if you own the policy at the time of your death, the death benefit, the amount of the death benefit in that life insurance policy can be included in your taxable estate when determining whether you have a taxable estate from the federal or state of Minnesota standpoint at the time of your death. The rate of the tax is roughly 40% on the value of your gross estate over $1 million. Now, people never have to pay that 40% on the first $1 million that exceeds $1 million because there's a federal unified credit. The current federal unified credit is $11.58 million per person. So for an individual, basically what that means is you can pass up to $11.58 million at death to somebody other than a spouse without having to pay any federal estate tax. For a married couple, that amount is $23.15 million, which means that both each spouse each has $11.58 million that they can pass to somebody other than their spouse without having to pay a tax. Now that amount sunsets in January 2026, but if it's consistent with what's happened in the past, they'll either keep it, they might reduce it somewhat, but once the public has this benefit, it's hard for politicians to take that away. The federal gift tax, that's for gifts that you make during your lifetime. There's a tax that you can give that's called, I call it the freebie. It's the annual gift tax exclusion amount, which most of you probably have heard about. That's a $15,000 annual gift that you can give to any person. And typically you don't have to file any gift tax return. Gifts that are made in any calendar year over and above the $15,000 are technically a taxable gift, but there's a way to avoid that tax by filing a gift tax return, but then using some of your unified credit amount, the $11 million that I just talked about. You can use that to make lifetime gifts, and you can use some of that credit, and you can avoid paying any gifts made during your lifetime that are otherwise taxable. So let's look at the Minnesota state tax situation. Basically, the way the Minnesota state tax works is it pulls from your federal gross estate. So whatever your federal taxable gross estate would be, that's your taxable estate for purposes of the state of Minnesota. The tax applies to any property of a Minnesota resident. So even if the Minnesota resident lives in Florida or something like that, if they own property that's located in Minnesota or they're still a Minnesota resident, then they may have to pay at death a Minnesota state tax. If you, for example, own real estate in Minnesota, but the real estate is owned by, let's say, a limited liability company, and you own the limited liability company, even if you reside in Florida, for example, and you own membership interests in the limited liability company, the fact that the company owns Minnesota real estate means that that real estate still would be included in your taxable estate for determining whether you owe a Minnesota state tax. The tax rate ranges between 13% to 16%. And here's what that chart looks like. So you'll see that it's escalated, and it gives you an example of what the tax amount would be based on the size of the estate. Now, I should mention that in Minnesota has its own credit amount, if you will. Just like the federal estate tax has the $11 million unified credit, Minnesota has its own credit, but it's much less generous. Basically what that is it's $3 million. So you can apply any type of assets which you own towards the $3 million. So in other words, in Minnesota, if you die, you can give up to $3 million in assets, any type of assets, to anybody other than your spouse and not have to pay a tax. Now, for farmers or small business owners, in addition to the $3 million, there's also a $2 million qualified farm property deduction, which if you own farmland, basically tillable farmland, and if it meets certain criteria, you can use up to $2 million against your qualified farm real estate to get a deduction and hopefully get your estate down under the $3 million credit amount, which means you wouldn't have to pay any tax. And each person has this $3 million, and each person has this $2 million qualified farm property deduction or a small business qualified farm business deduction. Again, that's up to $2 million. So, for example, if you had a $5 million estate, some of it's consisting of farm real estate or a small business, you could potentially qualify for up to $2 million deduction against the real estate and then get the size of your taxable estate in Minnesota down to under $3 million. Then you can use the $3 million credit, zero tax to pay. No portability. One thing I forgot to mention on the federal side is that when you have a married couple, the first spouse to die, if they don't use all of their $11 million, they can do what we call port. They can port what's left of their $11 million to their surviving spouse, so that when the surviving spouse dies, they not only have their own $11 million, but they also can use what was left of their spouse who died first, use what's left of their $11 million. So you could, for a surviving spouse, they could potentially have up to $23 million that they can use in their estate as a unified credit amount. Minnesota doesn't have that. There's no portability for a married couple. So each couple has their own $3 million. If there's farmland or a small business, each of them have up to an additional $2 million deduction. Given that structure in Minnesota, it's often beneficial to divide an estate up between a married couple so that the real estate is divided fairly equally, or the small business assets are divided fairly equally between the couple, so that whichever spouse should pass first, there's assets in their estate that can be used towards the deduction and can be used for the $3 million credit, so that you can get overall the combined taxable estate tax effect for the married couple is that when the last spouse dies, there's never any estate tax to pay, zero. So you're talking about estates a combined estate that's maybe worth up to $10 million. And if you structure it properly, you could pass up to $9 or $10 million worth of assets for a married couple onto your kids without having to pay an estate tax in Minnesota. So gifting strategies, let's talk a little bit about that. When you make a gift, now when I talked before about federal gift tax, those are any types of gifts, whether they are gifts to a charity or not. They could be gifts of assets to a child or to a non-charity. And, if it's over $15,000 in any calendar year, there's a potential gift tax. A gift tax return has to be paid, but you can use some of that $11 million unified credit to avoid having to pay what otherwise would be a taxable gift. In addition, though, to gifts to non-charities, if you make gifts to charities, there are certain benefits to that. Obviously, that benefits society. When you make gifts to a charity, charities have societal benefits. They're doing something good for society, which other private individuals or entities don't normally do. They're kind of filling the gap, if you will. They're doing something good for society that benefits all of us. Gifting to charities also affirms your own personal values. There may be certain things that you care a lot about. Maybe it's the American Heart Association. Maybe it's the FFA Foundation. Whatever it might be, gifting allows you to support those values and those causes that you believe in. Through gifting, you can create a legacy for yourself. This can, depending on how the gift is made, you can set it up so that it's an annual gift. It's a gift that lives long after you are gone. Lifetime gifts are gifts made while you're alive, and there's usually income tax benefits for doing that. We'll talk more about that in a second. But those are gifts made while you're alive. Testamentary gifts are gifts that you make at death. So those might be gifts that are made either through your will or through your revocable trust, for example. They might be gifts that are made with a life insurance policy, for example, where you identify the beneficiary as a charitable organization. There also are ways to make gifts with a qualified retirement account, such as an IRA or a 401k or something like that. So there are lots of ways to make gifts either during your lifetime or during or when you pass. During your lifetime, the benefit of gifting is you also can get a deduction against income tax. So some gifting strategies. I talked about this before. The annual exclusion amount on the federal gift tax site is $15,000. Any gifts that are made under that amount in any calendar year is tax-free. You don't even have to file a gift tax return. If it's cash, if it's non-cash, in other words, it's a gift that's in kind, it might make sense for you to file a gift tax return, even though the gift value is under $15,000, because by filing a gift tax return, it forces the IRS to either challenge the value that you've claimed for that gift, in other words, that it was under $15,000, or if the time period passes, it'll cut off the IRS's ability to challenge whether that in-kind gift was in fact under $15,000. So if I was going to make gifts during any calendar year, and if I made them over $15,000 to any person, then a portion of that gift, the amount that's over $15,000, would be taxable. I'd have to file a gift tax return for that amount. I can spread out gifts among, for example, children if I wanted to. If I gave each of my children $15,000 in a calendar year, and I gave $15,000 to one, $15,000 to another, and $15,000 to the other, there'd be no tax. Even though that the aggregate amount of the gifts I made exceed $15,000, the gift that I made to each individual was $15,000 or less, and therefore each of those gifts does not require a gift tax return, and it's non-taxable. From a tax standpoint, some of the best advantages you can get from a charitable gifting standpoint is if you make gifts during your lifetime. Now, making a charitable gift can generate a charitable deduction in your income tax return. But in order to get that, you have to itemize deductions. For example, the standard deductions for an individual are $12,400. So in order to make the charitable deduction worth it for income tax purposes, is you would have to itemize deductions, and the amount of the charitable gift together with your other itemized deductions would have to exceed, in the case of a non-married individual, would have to exceed $12,400 in order for you to be able to use or get the charitable deduction. Gifts can be made in cash. They can be made in kind. In kind can be commodities, for example. I have quite a few farmer clients who each year make gifts to children, or it could be to a charity in this case, but make gifts in kind. It might be crops, harvested crops, it might be livestock. So the farmer makes an in-kind gift, and then the charity gets that gift, and the farmer gets a charitable deduction against income. Services are not deductible. So, for example, as a lawyer, if I provided legal services to a charity, that's not deductible. It's not subject to a charitable deduction. There are a number of different types of charities. Obviously, some of them are 501c3. That's a charity where you can get a full deduction. There are some charities that are not 501c3. They don't have that public charitable aspect to them, and so they may not be subject to a charitable deduction. So before you make any gift, you're going to want to make sure you check with the charity of your choice and make sure how they're classified, and talk to your accountant about what type of deduction you'd qualify for. The Minnesota FFA Foundation is a 501c3, so they are a public foundation, and you get the maximum deduction by making gifts to the FFA Foundation. But the typical types of public charities or private foundations, the 501c3s, churches, religious organizations, governmental agencies also can qualify for the deduction. Now, let's talk a second about the Minnesota gift tax. There is no Minnesota gift tax, and that can be a very key strategy that you can use when you're thinking about doing gifting. So let's say you have what otherwise would be a taxable estate for purposes of Minnesota, and let's say you don't have a qualified farm property deduction, and you don't have a qualified small business deduction that you could use, that $2 million deduction I mentioned before. You just have the $3 million, okay? The $3 million credit or the $3 million exemption amount that Minnesota gives to everybody, each person in Minnesota at the time of your death. And again, that's $3 million of assets that you can give to your children or to somebody without having to trigger a Minnesota estate tax. But let's say you have a $4 million estate, okay? So if you died tomorrow with a $4 million estate, you would have to pay tax on $1 million because you use your $3 million. That would leave you $1 million that you'd still have to pay a tax on. Well, how can you manage that from the state of Minnesota estate tax standpoint? Well, one way would be to make gifts. During your lifetime, you could make charitable gifts to a charity of your choice, or you could make gifts not to a charity. You could make gifts to children or whoever, but you make gifts, and those gifts might otherwise be taxable gifts. To use the $15,000 annual gift tax exclusion amount each year, it's going to take you quite a while to give away $1 million. So you could make taxable gifts, or you could make deductible charitable gifts to a charity. And those would be gifts that exceed $15,000, let's say. The otherwise would be taxable, but because it's to a charity, there's no gift tax from the federal gift tax standpoint. Or if it would be a taxable gift, you can use some of your unified credit, some of your $11 million that you get on the federal side. You can use that during your lifetime to avoid paying a gift tax. So you've made a gift, all right? And let's say over 1 or 2 or more years, you've gifted away $1 million, all right? And you've used some of your federal unified credit, some of your $11 million, or you've made gifts to charities, which means there's no federal gift tax. You've reduced the size of your estate now by $1 million. Now, the kicker here, there's a catch. And the catch is that you have to live 3 years past the time that you made that gift, past the time that you've gifted the $1 million. If you don't, Minnesota state tax will claw that back into your estate for purposes of determining whether you owe an estate tax. But if you gift the $1 million and you live 3 years past the gift, that asset is no longer considered an asset for purposes of your Minnesota estate tax. So what you would have effectively done by gifting the $1 million, living 3 years, you would have reduced the size of your estate from $4 million down to $3 million. And all of a sudden, you do no longer have a taxable estate for purposes of Minnesota estate tax, and you could give $3 million to your children, to somebody other than a spouse, and there'd be no Minnesota state tax. And of course, there's no gift tax because Minnesota has no gift tax. So that is a very valuable strategic planning method for avoiding a Minnesota state tax where you would otherwise have a taxable Minnesota estate, and you don't have some of those other deductions we talked about. So this is a chart that basically shows what the amount of deduction you can get If you make some lifetime gifting, for example, if you make a gift to a public charity, such as FFA Foundation, if it's a cash gift, the amount of the deduction would be the full fair market value of the cash. Now, what the contribution base there is there's a limit as to how much charitable deductions that you can take each year against your taxable income. So, for example, in the case of a public charity and a cash gift, your contribution base is 60%. What does that mean? Well, on your tax return, you're limited to making gifts in any calendar year of cash of up to 60% of your adjusted gross income. So if you had adjusted gross income of, let's use some easy numbers, of $100,000, let's say, in that taxable year, you would be limited to taking charitable deductions of no more than $60,000 or 60% of your adjusted gross income. So that's what those percentages are there. If it's a long-term capital asset, an asset that you've owned longer than a year for investment purposes, and you give that in kind to a charity, then you can take the full fair market value of that asset as a deduction against your income in the year that the gift is made, but you're capped at 30% of adjusted gross income. So as long as that gift is less than 30% of your adjusted gross income, you'd be able to deduct all of that gift in that taxable year against your income. If it exceeds 30%, for example, or exceeds any of these percentages, then you can't take all of it that year, but you can carry it over into the next year and use it as a deduction in the next year. Certain gifting strategies, you can make gifts. If you aren't making a lifetime gift, you can certainly make a gift in your last will or testament or in your revocable trust. There's certain ways you can do that within your will. You can make a specific device. So in other words, in the case of the FFA Foundation, you would have a specific gift in there where it says, I devise to the Minnesota FFA Foundation, Inc., the sum of X dollars or this particular asset. And that's a specific gift to the FFA Foundation, for example. Or another way you could do it in your will is what I kind of call the garbage basket. It's anything that's left over that I haven't given to my kids, or if I don't have kids or family members that I want to give assets to, or everybody dies before me, for example. Then there's kind of a residuary clause, kind of a catch-all clause where you would say, look, if none of the people that I've named above or none of my descendants survive me, then I give everything to the Minnesota FFA Foundation, for example. So it's kind of a catch-all clause where, or sometimes people call it a nuclear bomb clause, where everybody's gone, and I don't want the state of Minnesota to get my assets, so give it to the Minnesota FFA Foundation. It's that type of thing. You can also make gifts in your retirement accounts. So, for example, like a IRA or a 401k. Those are beneficiary designation type of vehicles. So you can identify a charity of your choice, Minnesota FFA Foundation, as a beneficiary under one of those retirement accounts. And then when you die, they would get the amount of the funds. Or you could limit it to a certain dollar amount. For example, you give a certain dollar amount in your retirement account to FFA or a charity of your choice, and then the balance goes to your children or to somebody else. You can also do that with bank accounts or CDs or stock, private stock investment accounts, like with a Fidelity or a any type of broker that you have. For an investment account, now I'm not talking about a retirement account like an IRA, but just a regular stock investment account or mutual fund account, you can set up what's called a TOD, transfer on death. And you could identify your charity, and you could designate a certain dollar amount, or you could designate all of it as going to that charity. A POD is payable on death. That works in the case of bank accounts or CDs or anything that has to do with a bank type of instrument, where you can designate on that account or on that CD the entity or the charity or the person that you want to get that when you die. And then when you die, if you have a POD set up, title transfers automatically. It doesn't go through your will. It doesn't go through your trust. It goes automatically to the person that you've designated. Donor advised funds are funds where, like Fidelity has these, a lot of brokerage houses have these, but they're funds that you deposit assets into, and you get immediately a charitable deduction, but you can, it allows those assets in the funds to grow through investments or interest to grow. And then you can then select who you want to get those funds and what amounts. It can be one or more charities that you can do. But those are kind of like almost like private investment accounts, but they're for charities. And if set up properly, you can get a deduction right away, charitable deduction, but the assets can sit in there, but you can't get them back. Once you've put them in there, it's like it's irrevocable. They have to go to a charity at some point. Charitable gift funds or endowments. Charitable gift funds are similar to donor advised funds. Charitable gift funds might be things that colleges would have set up or a charity would have set up for themselves, but they work a lot like the donor advised funds. You can put money in there, you can't get it back out. The assets can sit in there for a while if you want, and then over time or immediately it gets spun out to the charity. Endowments usually are set up where the principal you put in stays there, but the income that grows off of them each year maybe gets spun out to a charity. Lots of times those are used for educational purposes. You could do something like that for FFA's educational purposes, but the principal stays there. That never gets distributed, but the growth gets distributed. And then just to finish up, there are some other more complicated tools that farmers can use, or anyone really can use for doing some charitable gifting. There's charitable remainder trusts, there's charitable lead trusts, there's pooled income funds. Those are just to name a few. And I'll just touch on these real quickly. They're kind of involved, but I've used these, for example, for farmers who want to sell their machinery and equipment, but if they sold it themselves, for example, there would be a depreciation recapture of up to 40% of what the proceeds are from the sale. And you know, machinery and equipment nowadays can generate quite a bit of money, just given how valuable they are. So, for example, in this one case that I did for a farmer client was we set up a charitable remainder trust. We transferred the machinery equipment into that trust. The trust then sold the equipment, so they sold it tax-free inside the trust, and then the funds were held by the trust. Then, over time, the trust spun out every year annual or more frequent payments to the farmers. So that was income to them. So they were able to use that to live off of in their retirement. And then when the last of them passed, then what was ever left in the trust went to a charity, such as, for example, if you wanted to support FFA Foundation, it could go to the Minnesota FFA Foundation. And that's how those work. Basically, it's you transfer assets into the trust. During your lifetime, you get payments out of the trust. And then when you die, whatever's left goes to the charity. The charitable lead trust is just the opposite, where the charity gets the payments over time. And then when you die, then, or at the end of a term of years, then whatever's left in the trust goes to perhaps your children or a non-charity person or entity. And the benefit there is you get a charitable deduction at the time you put the assets into the trust, but the main asset ends up going with children or stays in the family, for example. So those work real well for farmers as well. Pooled income funds are basically similar to the directed funds one. The difference is where you're pooling funds, where, for example, New Ulm Foundation is one where you can put funds in, other people put funds in. The pooled funds then are invested to grow. They'll grow. They add strength to your investment, but then you still get to pick what foundations or what entities, what charities those monies go to. Okay. Hopefully that was informative for you. Our last slide gives you some examples. If you were inclined to make gifts to the Minnesota FFA Foundation. These are some examples of language that you might use in your will. If you're going to make a dollar donation, that first one would work for that, where you're giving a sum of money. The second one is where you want to restrict it to their educational or outreach purposes. The third one would be if you were going to make an in-kind gift, where in your will, for example, or in your trust, you wanted to identify a particular asset that would go to the Minnesota Foundation and to be used for either tax-exempt purposes or for their educational purposes. That is my presentation. I hope this was helpful to you for your estate planning purposes or gifting purposes, whether you're just a young person just getting started and maybe doesn't have any estate plan, or for someone who maybe has a taxable estate and wants some ideas on how you can manage those taxes and come up with a plan on how to avoid paying estate taxes and at the same time support a charity or a foundation of your choice. Thank you for the opportunity. I appreciate it. Stay safe. Take care.
Hi, I'm Martha Menning, and I am so grateful to have been named a 2020 James W. Tracy Scholarship recipient. Here's my FFA story. I fueled my competitive drive through career and leadership development events, competing at National FFA Convention for 4 years. First in creed speaking, then marketing plan team, extemporaneous public speaking, and I finished my 4th year competing, achieving what I only thought was just a dream, winning the prepared public speaking event. I was able to serve and impact the lives of others through my roles as a Region 8 FFA officer, a chapter officer, while also serving on the state nominating committee in 2018. And finally, I was able to develop meaningful relationships and create lifelong memories, attending leadership conferences throughout the state and nation. I've attended the Washington Leadership Conference, State Green Hand Camp, Agriculture Policy Experience, and so many more. As I reflect on my FFA story, it won't be the achievements or the time on stage that I will remember, but it'll be the skills that I learned, the memories I made, and the connections that I formed that will truly stay with me forever because they shaped me into the person that I am today. Currently, I'm finishing my freshman year at Butler Community College located in El Dorado, Kansas, where I've had the opportunity to be a member of the livestock judging team. After Butler, I plan to transfer to a 4-year college to major in meat science and agriculture communications, with hopes of contributing to the agriculture industry by improving food safety. While the James Tracy Scholarship is enabling individuals like me to pursue a college education, his true legacy will be felt in the work we do as professionals in the future. I will forever be appreciative of James Tracy's selfless act, which truly proved that he believed in the future of agriculture by directly investing into the lives of young people.
Hello, my name is Amanda Sommers. I'm the program coordinator for the Minnesota FFA Foundation. Thank you so much for joining us tonight. One of the main project areas that the Minnesota FFA Foundation supports is scholarships. One of our most rewarding programs that we support is the Blue Jackets Bright Futures program. Last year alone, we supported 440 members across Minnesota by sponsoring their very first Blue Jacket. That is incredible, and it's all in thanks to support from our donors and sponsors across Minnesota who chose to invest in our Minnesota FFA members by providing their very first Blue Jacket. There is nothing more rewarding than zipping up that very first Blue Jacket, and most of us can remember when we did that and where we were. Thank you to all of you who have chosen to support that program. We would love for you to jump in and sponsor if you have not already, and you can go to our website and pull up the Blue Jackets Bright Futures program opportunities. The Minnesota FFA Foundation also offers many other giving opportunities throughout the year. We support Give FFA Day, Giving Tuesday, Give to the Max Day, and so many more. These are all one-day giving campaigns that support many individual scholarship areas that we offer to our FFA members. This includes the Blue Jacket program, this includes camp scholarships, and so many more. There are so many ways that you can reach out and support individual FFA members through the Minnesota FFA Foundation. Thank you for considering this opportunity to provide to our young people.
Wow, I'm so thankful that we've had the opportunity to visit tonight. And as we've heard some great information from Reed there at Gislason Hunter, we're so grateful for all that you've shared. I would ask our audience today to start thinking of some questions that they might have and enter those into the question queue there. I do have a few that have already come in. So as I kind of start to look at those, I just want to say thank you to Reed and Amanda. But Reed, the first question is coming to you. Should you let a charity know that you are gifting something of value to them? What is the value of letting them have knowledge of that gift in advance?
Yes, you should, for a number of reasons, perhaps the most important of which is letting them know in advance so that you can make sure that in making the gift, you get it done correctly. For example, one of the most basic ones would be to make sure you get their name correctly in the designation that you're making through one of the methods that I mentioned before, but to make sure you get the name correctly. Typically, you may need their tax ID number, so that's another way. A lot of those foundations, including FFA Foundation, I'm sure, have different things that they do for the community. You mentioned 5 before that the foundation works on. Another reason to contact a charity of your choice is if you want your donation to be used for particular purposes, okay? Or whether you just want it used for part of their general operational costs and expenses, you could do that too. So having a communication with them is important. It also benefits them to know, and it allows for their planning a little bit, to know what at some point they may be receiving, whether it's in a lifetime gift, which they'd have a little bit better idea of okay, we're going to have a gift coming in this year because Reed Glawe's making a gift. Or if it's a gift through your will or end of life type of gift, at least they know that that's coming, and that's something that they can plan for. So yes, it's I think it's not only a good deal, but I think it's essential that you consider doing that.
Well, as I think about all the information you've had, you really, I think by letting them know, become an active partner in making sure your wishes and your legacy is fulfilled the way that you want. And it's neat to think of the conversations. I know that I've been part of some of them with individuals who have a very specific program or activity that touched them, and they want to support that same type of experience for a future generation. So I thank you for that advice. I think that is wise. We've got a question coming in from Jenna and Gabby, and I'm going to let Amanda have this one first, and I'll chime in a little too. What made you all want to be part of the Minnesota FFA Foundation?
The Minnesota FFA Foundation is incredible. It's a great way to support our FFA members across the state of Minnesota. We have almost 11,000 FFA members here in Minnesota, and almost 35,000 that are involved in agriculture education. And so that's an incredible way for your support to support so many individuals across Minnesota and really help them to pursue their future, whether that's a career in agriculture or not, but really just building their talents and supporting them in ways that we can. So it's incredible.
Well, and I'll just piggyback. Amanda and I had the opportunity to work together a lot, and I think we both break into telling how FFA helped us personally, and it's been so rewarding for us, not only to see it with we were introduced to it by our families, but a lot of kids come to the FFA not through a family connection, but what they leave with the same type of excitement and energy that we have, that they grew through those experiences. So it's pretty special to be involved with the foundation, because we really never have to separate from a very energetic youth organization that helps young people. Reed, I got another question that came in for you. Okay. If a person's getting ready to go in and visit with their attorney, I mean, obviously some thought process, some discussion, if they're married and have a spouse or others to consider. But what should they really kind of bring in? What is that, you referenced having a clear idea of the name of the organization, but what should they kind of think through as far as, that gift? Is it going to be a property gift? Is it going to be a percentage? But what should they kind of think of those early steps?
Wow. There's a lot to that. Not only with respect to charitable gifting, but overall, there's all kinds of issues that a person considering working on their estate plan and as part of that making a gift would want to think about. Typically, whoever their attorney is typically has a questionnaire that would help them walk through and think about those type of things. Some of the non-charitable type of issues would be, who do you want to have be your personal representative or your executor? Or if you're going to do a trust, who would be your trustee? What do you want to have happen with your assets if after both you and your spouse are deceased? Does it go to the kids? What happens if some of the kids die before the last of the two of you die? What happens then? There's issues about who do you want to have as power of attorney? Who do you want to have as a backup power of attorney? Who do you want to have as your healthcare agent? Okay, so those are kind of all just typical questions that you would have, even without a charitable intent. With respect to the charitable giving aspect of it, a couple of things, and I've helped clients over the years make gifts. Some of them don't have children. Some of them don't have close family members, and so lots of times those people want to do charitable gifting. They want to give their money or their assets to somebody who, or to a charity that supports their causes or things they have interests in. And what I always encourage them to do when they're thinking about any charity, but in this case, let's say the Minnesota FFA Foundation, is to do research on the foundation, all right? In this case, for example, reaching out to you or to Amanda, getting information on what it is you do. What is it about what you do that makes them want to support you, okay? So that way they know that when they're making a gift to the foundation, they know what their dollars are being used for, what's being helpful for. You touched on a couple of them. If they're primarily interested in the educational part of it, how can they set up that gift so that when it's received by the foundation, how can the foundation use it for educational purposes? I've seen people where they put limits on their gifts and it kind of ties the hands of the charity, and it makes it can make it unwieldy or difficult to use those monies or the gift by the foundation. So I think one of the biggest things a person can do when planning for charitable gifting is to talk with the foundation and do some planning on what it is they want to try to achieve. How would the foundation be able to use those funds to achieve those goals? And then I think with that information, they can come to me, and then that helps me design and describe the gift that they want to make for the charitable gift.
Wonderful. Well, thank you. The next question I'm going to throw over to Amanda. I know the FFA Foundation is the steward of the James Tracy Scholarship. We heard a little bit about that, but you work very closely with the student recipients. And so the question here is, how has that felt to be involved with that program? What have been the results of his investment in young people? And you've had a firsthand look at that.
Absolutely. We were very fortunate 5 years ago to work with James W. Tracy as he decided to donate his estate to the Minnesota FFA Foundation. James is was a farmer from the Denison area and donated his estate and wanted to support and build youth's future careers in agriculture. So each year we are able to award between 16 and 19 scholarships to young graduating seniors pursuing a degree in agriculture. graduating seniors as well as those that are involved in college as well. And so that's a really, really neat program. We've done that 5 years now, so almost 100 students have benefited from that program. We're hopeful in the very near future that when that estate sells, we will be hopefully able to award about $100,000 annually in scholarships to students in Minnesota who are pursuing a career in agriculture, living out James Tracy's dreams through our youth in Minnesota here. And we're so proud of that. And that's something that means more to these students than anything. You saw a little glimpse of that from Martha's message as well, how much that impacts them and really assist these young people in being able to go to college and pursue their dreams.
Well, I want to ask another question that's come through of Reed, and then we'll start to bring this to close because I know that we want to kind of respect everybody's time. But Reed, this one is to you. The question was asked, how often should you revisit your will? And is there certain things that kind of trigger you coming back and visiting it? Could you share a little thought on that?
Sure, that's a great question. The typical rule of thumb is approximately every 5 years. You should think about revisiting your will, maybe contacting your attorney to see if there's something that you need to do to refresh your will or revise it. Some of the things, there might be things that happen within or less than 5 years that might cause you to want to do that too. Some things might be a death in the family. Some of it might be if you inherit property from somebody that you weren't expecting, and all of a sudden the size of your estate has grown or it's changed, and some of the tax planning aspects that you maybe did the last time you were in may have changed. That's a couple reasons. Another reason might be if there's changes in the tax laws, obviously, and the estate tax. I mean, in the last 10 years alone, 15 for sure, the federal estate tax laws and the Minnesota estate tax laws have changed considerably. So when you hear in the news about changes to those type of things, it might be a good idea to contact your attorney. Now, most people think, oh, that means I got to go and meet with the attorney. There's got to be a meeting, there's more expense and things like that. But it might just simply be a phone call. It might be a phone call to the attorney who helped you plan and design your estate plan, and have a 15-minute conversation with them about, look, I heard this, or this is what's happened in our family. Do you think we need to get together, or are we still good? And in probably within that 15-minute time, your attorney should be able to tell you whether yes, there probably is a good reason for you to come in, or no, I think you're okay. We built some flexibility into your estate plan last time we did it. I think you're good. Maybe stick with the 5 years because whatever it was that happened or change in the law, you're still good.
Well, thank you for that great advice. Well, what a wonderful night to really think about how our actions now could have an impact that lasts for decades to come. And Reed, Glawe, we thank you for sharing your expertise with us tonight and really sparking some of those thoughts as we think about how can I impact and support something that's so valuable to me. To those who shared a message, Amanda, Martha, Jean, and all of us, as we kind of talked about the value, I think it's really exciting when I look at what the Minnesota FFA Foundation is able to do to support young people. As was mentioned early on, we support 5 major areas, and they include scholarships, youth leadership, teacher prep, the Minnesota FFA Convention, and then other special projects. And I think that as you consider what you're passionate about, if you share the same passion that a lot of us do, a gift to the Minnesota FFA Foundation might be a good place to start. Well, as we kind of wrap this up, I want to remind you we have a thank you gift for you joining us tonight, and we will be sharing with you a Forever Blue lapel pin. As just a reminder that, this is a blue jacket that will forever shape the young people's lives who wear it, and we want you to be part of that. So we will be making arrangements to get those out to you in the next week or two. And then if you'd like any additional information about any of the Minnesota FFA Foundation programs or want to have a conversation, we'd love to learn more about you and what you value and how you would like to to plant seeds and grow leaders, because we believe that the Minnesota FFA Foundation is a great place to do that. And as we close off our time, I oftentimes share our mission statement, but tonight I want to end with our vision statement. And that is that the Minnesota FFA Foundation's vision statement is engaging partners to ensure agricultural education is available in every Minnesota school, and that students are enabled to have access to life-changing programs. And it takes just one, and it takes us to be that one to make some kind of action that will grow opportunities for young people. So on behalf of the Minnesota FFA Foundation Board of Trustees and all of us who support the Blue Jacket and the students inside, thank you so much for being with us tonight, and have a good evening.
Thank you.